Okay. And we're live. So, I did mention that I was gonna try and give my copyists an idea of why we're picking the stocks we're picking. So fundamentally, we're picking these stocks because, yeah, I suggest them, but then we also do some sanity checks, right? And we ask, is there any growth left in this stock? So basically, that's what we're going to be doing here, right? So we're going to be looking at stocks that the AI model has high conviction in, and ask ourselves, are Wall Street analysts also on the same side as we are? Because basically, you might pick a stock, but if you don't have the right tailwinds, the stock is not going to move, and you're going to get depressed going forward. So it's helpful to know that when we're picking stocks that a large number of people agree with us on, and as long as that stock continues to deliver on our expectations, we expect the price to keep moving in our favor. So the first stock we're looking at is Pinterest. Yeah. So why Pinterest? Because it has been one of the most, it's been one of the stocks that has grown the most. So over the last year, Pinterest has returned around 240% in terms of price appreciation. So fundamentally, the question you would have is it overvalued, right? If a stock has gone up by 240% over the last year, maybe you're getting in at the wrong point. So I did listen to the what do we call it? I did listen to the recent earnings call, and I think there's a lot of room. There's a lot of room for the stock to continue growing as long as management continues to deliver on growing cash flow and expanding the market that Pinterest is currently getting the most out of. So in terms of overvaluation, it's not too overvalued, right? At the current price of 66 is pretty close to the fair value of what the analysts believe. So we might want to ask ourselves, how far off are we with respect to with analyst prices? And not so much, right? On average, the average price is around 53. That's about 13 above what the analysts start putting forward. And this comes down to analysts are usually conservative and they like to head, right? So this is most probably heading behavior. For really Pinterest to deliver, it must deliver on these items. Specifically, it must continue to grow revenue, it must continue to grow earnings, and it needs to continue growing cash flow, and specifically cash flow from operations. And all the analysts on average agree on this. So we do see pronounced projected growth in earnings, pronounced projected growth in cash flow, and pronounced projected growth in cash flows. So all these things are going in the right direction, right? In terms of forecasts, analysts on average agree that Pinterest has a really good future. And if you look at it in terms of future prospect, Pinterest is projected to grow above its industry average of around 70%, above the market average of 16%. In terms of revenues, also projected to grow way above industry, way above the market. So again, we are buying Pinterest because of the growth, and the analysts believe it's going to grow and grow in the right way, right? It's going to grow not by spending too much, but grow and generate cash flows. That's what, as investors, that's what we care about. And Pinterest is on path to be profitable by the end of next year, right? So the expectation is that Pinterest is probably gonna go into profitability by the end of this year, which is good. So you want companies that grow a lot, and companies that grow not by burning cash, but by generating positive cash flows and revenue and in profits. And that's what Pinterest is trying to achieve and doing a very good job at it. Finally, the last metric that I usually look at here is what is the predicted future return of equity, right? So how much is management generating with respect to the equity invested in a firm? and the future projected return on equity is around 30%, which is again very good compared to the industry average of around 14%. So you buy a stock because it looks pretty, but you buy because of the future cash flows you can get from those stocks. And looking at Pinterest, everything is pointing towards dramatic growth in the future. As long as management continues to deliver, we should expect the stock price to continue surging. So I don't expect it to be growing 200% over the next year or the next 5 years, but I at least expect the prices to double, right? So I expect at least 100% growth. So that's why Pinterest is our highest conviction bet for the moment. The model really believes in Pinterest, and this comes down to financial health. Yes, all 6 check marks. So is financial really healthy, and future prospects in the next year to 3. Analysts really believe Pinterest is going to grow 1, revenues, 2, earnings, and 3, cash flows. And this is why we're betting Pinterest is going to be one of the best social media stocks to hold over the next year, I may say. So Wall Street's simple Wall Street also provides sort of a simple set of bullet points that you should care about. So where does Pinterest fail in terms of this checklist? There has been substantial insider selling over the last 3 months, given that most of the top executives are paid in the stocks, and Pinterest is a tech stock of a sort, so they also pay even ordinary workers in options. A lot of them have been exercised with these options, and they have been selling these options or selling the stock mainly because that's part of their revenue, that's part of their salary, right? So I'm not too worried about this insider selling. What I'm really worried about is the dilution, right? So even if the stock grows and becomes profitable, if they issue too much stock, then as a shareholder, the per share fraction that I get reduces over time, and that's not good. So that's something they should solve. The good stuff, there's a lot. So it's forecasted to achieve profitability over the next 3 years. Revenues are forecasted. Revenues and earnings should grow around 50% over the next 3 years, which is really good. They have sufficient cash to cover at least 1 year of operations. Well, they do not pay a dividend. I'm not a dividend guy, so no problem there. The share price has been stable over the last 3 months. So I wouldn't really say it's been stable. It's been highly volatile, right? It has sufficient analyst coverage. So a lot of people have their eyes on it. So a lot of tailwinds and headwinds of a sorts. Revenue is meaningful. So revenue currently stands around 2 billion. Market cap around 43 billion. So yeah. So that's about it, right? So that's why I believe Pinterest is a buy, mainly because it's financially healthy and it has a lot of future growth way ahead of it. So financially healthy, what exactly do they have in mind? Let's look at the details there. So short-term liabilities of Pinterest are around 2.5 billion, and this exceeds its short-term liabilities. Okay, so short-term assets of around 2.5 billion exceeds short-term liabilities of around 200 million. They recently issued a lot of might be long-term debt. So short-term assets also exceeds long-term liabilities. That's surprising. I figured Pinterest recently issued a lot of bonds to finance its activities, but on the face of it, it seems to have a lot of short-term assets and not very much of either short or long-term liabilities. So that's pretty good. So Pinterest is debt-free. Very interesting. Okay, so if you're looking for a stock that's going to 2 times over the next year or to the next 3 years, Pinterest is the stock. Look into it. Do your own due diligence and probably add it to your portfolio. This is no financial advice. Okay, guys. See you on the next one.